So joining me now is Dan Geltrude, managing partner at the financial consulting firm Geltrude and Company, who has served on boards of community banks for 15 years plus. So Dan, it's really good to get your take. And what is the current risk in the wake of these collapses?
Well, there is a risk that this could become widespread, although I'm not so sure that's going to happen. If you had to ask me, do I think there are more than just a handful of banks that have some concerns? I think the answer is yes. But I don't think we're at the point where we have to be concerned that this is systemic at this point. So the main thing that I think people have to realize out there is they have to be careful with their money in terms of where they're making deposits. And you want to make sure that the banking institute is going to be FDIC insured. I mean, you want to have that protection up to $250,000. And if you're not putting your money in a banking institution that has that insurance, then you have complete exposure of any money that you have deposited there.
So let's talk about that. Certainly for businesses, as we saw with SVB, Dan, and wealthy individuals who have more than the FDIC insured threshold in a bank right now. What are some steps for them? Is it moving money into bonds, into some of these big money center banks? What are the options?
Well, to start with, I believe that the federal government is making the right move in saying, look, in SBV, in Signature Bank, we are going to make sure that all deposits are going to be covered by the FDIC and extended past the $250,000. If they don't do that, then you have a situation where you can really create a lot of panic in the market, and that is not going to help anybody because you could see the dominoes start to fall after that. But in terms of, what people can do, well, you have to be careful with your money in terms of evaluating your risk. Now, of course, treasuries are going to be fully backed by the United States government. So if you're really looking for safety, obviously that's one of the places where you should look.
What does this mean for inflation, Dan? Inflation continues to impact every American out there, as does the path forward for rates.
Well, here's the quandary, right? And everybody's known it since the beginning in terms of the approach to trying to get inflation not only under control, but start to reduce it, is to use interest rates. And what that does is an attempt to bring down demand, right? So we can bring supply and demand in line, and therefore inflation will come down. You could absolutely make an argument right now that the reason these particular banks are having issues, not just because perhaps there was mismanagement and lack of diversity in terms of their customer base, okay. But if you look at where they were putting their money in terms of they were investing into long-term investments, right? Interest rates were low. Then interest rates started to go up, and they were using long-term investments in order to meet the short-term nature of deposits. So we have a situation where inflation and interest rates did have some impact on what we're seeing with some of these banks right now. Yeah. So what to do next? I would think the Fed would continue to raise rates because their number one charge right now is to take down inflation.
Yeah. Very good points, Dan. We really appreciate the time, especially today, to make sense of this all. That Fed meeting is on tap next week. Dan Geltrude, managing partner at Geltrude and Company.